Alrighty, guys. Welcome. We're starting day 2 now officially, and let's just dive right on into it. We've got a lot of stuff to cover. Okay, somebody laugh at my cartoon. Got to be careful about that whiplash. Okay, today we're going to be talking about the overview of technical analysis. We're going to start talking about continuation patterns in there. We're going to look at how to see our criteria to find stocks to trade, and we're going to do some website analysis. Okay, I'm going to talk about trading style, and you're going to get your first taste of building your business plan, your trading plan. We saw this market this morning that we had really good news in the futures. The Dow Jones futures were up about 50 points. The composite was up around 12, 13. The S&P futures were up around 6.5. So we knew that we were going to have an up opening. But we also, if we were intelligent and looked around at the global picture that we talked about previously, that we knew that there was some geopolitical problems out there. There was the threat of terrorism is still holding. And of course, we also know that jobs creations haven't been as robust as we wanted and stuff. Yeah, a couple of stocks have had very good earnings and stuff. So we saw the market pop up and start to drop down. Guys, it's very, very important that you start early, okay? You need to work the night before, lay out some plans, polish your long gun and your short gun, okay? Make sure the bullets are on there, spin the cylinder a couple times, listen to the action, make sure that your leather's all greased, all that good stuff. But now it's time to go to war. Now it's time to go to the gunfight. It's the next morning. You want to have an overview. You want to know what does it say up here? Understand the waters before you get in. I don't know what your mother told you, but my mother told me always stick your foot in first. Is there anything down there below? Don't jump into dark water with both feet, okay? It might be cold. It might be shark infested. It might have rocks in the bottom, okay? Go in slowly. Know what's going on. Let the market tell you what it's going to do. We saw it pop open at the get-go, but then it starts to slump down because of these overriding burdens, okay? And we always have to be aware of those. Now, we can start to look at some of these in a different way. And this is what we call technical analysis. Technical analysis is nothing but the graphic representation of the prints. Remember we talked about the time and sales, the actual reality, the actual transactions. Well, these are translated into pictures, okay? And in those pictures, we should be able to identify patterns. So what is technical analysis? Well, obviously, it's going to be the study of those charts. What we're really going to do is analyze a stock's history and possible future behavior. We don't know that it will behave this way. Possibly. We want to stack probability on our side by studying the charts. Okay? What are we going to look at? We're going to look at it, price and volume. Price and volume is generated by the emotions of the people who are trading the stocks. People, we do not trade stocks. We trade people. Okay? We look at stock prices and we read about they came out with this new widget, they came out with the cure for cancer. Those are all facts. But what drives the price is the emotional response of other people. Okay? That emotion breaks down into two groups, fear and greed. And of the two emotions, fear is far stronger. That fear and greed is going to affect price and volume, and that's going to start showing us repeating patterns. Now remember what I told you the other day. It's not perfect pattern repetition. It's close, but not the same. We can also add some tools. By using a little bit of mathematics, we can derive different studies from our charts. Some of you have heard some of these names like the MACD, the Moving Average Convergence Divergence, or stochastics, or Fibonacci. Okay, we're going to look at all those in depth as we go through this course. but I just want you to be aware that those are what we consider indicators and oscillators, and they're mathematic derivatives of actual price. So, technical analysis is the study of price movement, volume, and the price relationships that it creates. And we're going to see this displayed on charts, and we're going to use the concept of simple chart geometry to begin with, and we'll become more and more involved as we go along. The theory behind technical analysis is really broad. It states that everything that is known or is knowable should be about a stock should be reflected within its price and volume action in its chart. So if you learn to really study charts, you can certainly see a very, very good snapshot of historic situations. It doesn't tell you what the future is going to be, but it does give you some probability. Obviously, most of you guys understand the concept of support. We've done it up here on the board a couple of times. Every time we've seen Academy come down and hit $30, it's bounced up. It's done that 3 times in the last 3 months. It's coming down to 30. What is the probability? That it's going to go up or it's going to go through that support? Well, historical probability says it's going to bounce back up. So therefore, we'd be looking at our long gun, okay, as we approach 30. And we would apply the general rule: buy near support, sell near resistance. Okay? But does that mean it has to stop at 30 and go up? No, it could go right through it. That's why we have stop losses. We admit that we're going to be wrong some of the time. Again, why charts? Well, to some extent, history does repeat itself. Actually, what I like to say is historians merely repeat each other. But therefore, there are patterns that are very close. The reason they're very close is because they're popular. And by popular, I mean that Joe uses them. Joe reads books. Joe has become far more sophisticated in the ways of the markets in the last 10, 15 years. As he reads more and more, he thinks he's in control of his destiny. And he starts to look at charts, and he thinks that he sees support, and therefore he starts to buy. Again, like I said to you guys earlier, this becomes a self-fulfilling prophecy. If he thinks it's time to buy and he buys, well then price is supported. Where there was really a support line, if he believed it was a support line, and a lot of people buy it, then the price goes up. And it was support, okay? The cool thing about charts is most of the time they work. Most of the stuff I'm going to show you has a 60 to maybe even as much as an 80% correlation in it. Remember, if it has 50-50, we're gamblers. We want something higher than 50-50. You ready? But what's the bottom line say down there? They don't always work, people. You never bet the boat, the farm, okay, the whole enchilada, the whole 9 yards, whatever you like to say, on a chart. It is, again, one tool. It is not the tool. There is no the tool. All we can do is take a series of tools and hopefully give us a high degree of probability. We're going to be hunting for our targets using charting. We're going to use different charts for perspective. So far, the charts I've shown you mostly have been intraday 1-minute charts. Those may be too fast. David is going, wow, it's going up and down too choppy. And if it is, then you need to go to a slower chart. If you're only looking at 3 days, what happened 2 weeks ago? What happened 2 months ago? Are we in an overall uptrend or an overall downtrend? Okay. Yeah, we could be seeing a little spike. Okay, and of course I set my marker down again. We could be seeing a little spike right now. We could see this thing going like this. But what if we looked back in time and saw this? What's that little spike? A good opportunity to short. Because what is the overall trend? Down. Okay? So in any given time frame, if we're just focused right here, we go, well, it's a long. Well, it is a long for a short period of time. But if we're going to hold it for more than a few minutes, we'd rather be selling it short and going with the trend. We're going to use, there's a lot of different ways to chart things. We're going to use the real basic ones here. We're going to use line charts, bar charts, or candlesticks. pretty much today, most people prefer candlesticks because they're graphically important and they're also dynamic. They change colors as they move, as they form the actual candle, okay? But we'll look at them all. As I said, we want to use our charts and pairs, and as when we were talking about the futures and looking at strong stocks, remember, people, if you're going to use them in pairs, you want to use apples to apples, okay? We're going to learn how to draw lines because they really do help you determine where a trend is, where we are in that cycle, okay? And again, we always want to make sure that our charts are the same size. Guys, in the class here, we're going to be using basically square charts. But being perfectly honest, I started a long, long time ago. I use a 3x5 aspect, 3 high by 5 long, like a postcard. And that's what I have on my platform at home. Why? Because I always want to look at the market through the same perspective. If I take the same chart and make it narrow and real tall, it looks like a very exciting day. If I make it real long and narrow, it looks like it's dead flat, okay? And yet it's the same price. So you always want to look at it the same way so you know where you are in the perceived reality, okay? Remember, the trend is your friend. The smart thing to do is to trade in the direction of the trend. Ed Seykota, one of the great traders of all time, said, "The trend is your friend until it bends." Okay? Types of charts. Again, we've talked a little bit about this. Certainly, the type of chart has to be in tune with what we're doing. For instance, if we're intraday trading and we're only going to take 2 trades and we expect these trades, we expect Cisco to go up for the next 4 hours. Well, we could get away with maybe a 15-minute or a 20-minute chart, okay? But if we're only going to play Cisco for this little circle right here on this little uptrend, and it's going to take place in the next 5 minutes, can we use a 10-minute chart? No. So typically on intraday, we don't even have it up. Oh, yeah, we do. We have the tick chart up here. For a scalper, a guy who's going to be in and out, in and out, in and out, in and out. You know, and you guys have, you can imagine what this looks like. You know, a guy smokes cigarettes, drinks coffee, and pounds a keyboard. His eyes are real big. You know, well, he uses a tick chart, and that shows every transaction on the chart. And as I told you yesterday, if you watch a tick chart for more than an hour, you start to develop a nervous tick, okay? Momentum traders, guys who aren't making every second trades, but they may be trading every 1 or 2 or 3 minutes, are going to be using 1-minute charts. Guy who expects to be in a trade for the next hour, okay, might be using a 3 or a 5-minute chart. Just think about how many points of decision that allows you. If you have a 1-hour trade, you think Cisco is going to go up in the next hour, and you use a 5-minute chart that gives you 12 decision points. 5 into 60 goes 12 times. So 12 times you get to make a decision. Is it still doing what I expect it to do? If you use a 1-minute chart, you have 60 decision points. You're working all the time. Every minute you have to make a decision. Okay? Now, if you like that, you'll be a high-speed trader. If you don't like that, you'll be a slower speed trader, and you just have to match your times. Now, swing traders might be using half an hour, 1 hour, or even daily charts. And they may be looking back 60, 90, 180 days, or even a year for perspective. Where are we in the big scheme of things? Okay? I expect to hold this trade for the next week or the next 2 weeks. Okay? Where are we? What is the probability that it's going up or down? So now I may switch to an intraday, but a long term, an hour chart. Or I may even be just using daily charts. And of course, if we're a position trader, we can actually switch into weekly charts, monthly charts, and believe it or not, they have charts where the candles are a decade long. 1990 to 2000, that's one candle. Because a Japanese guy created them. We're going to talk about that. His name was Munehisa Hama. Hama-san created Japanese candlesticks in the 1500s in feudal Japan. It's a very interesting story. We'll get to it. So what are we going to use? Line, bar, or candlestick? Okay, what charts do we use in certain situations? Let's have a look. Now, data on a chart is presented in 4 parts called OHLC, or open, high, low, and close. Now, most traders believe of those 4 parts, those 4 pieces of data, which one is the most important? The close, because that determines who won the fight. Okay, we have 2 armies. We have the red coats versus the green coats, the sellers versus the buyers. And who won? The stock opened low, and at the end of the period it closed higher. The buyers won. They shoved the red coats back. Okay, and if the sellers win, the price opens high and it closes low, the sellers won. So the close determines who won that battle. Maybe not the war, but that period. Remember, we may be looking at this on a 5-minute basis, but we're going to be trading it for an hour. So the battle was won by either the buyers or the sellers. We don't know who yet won the war. Now, what I have up here on the board is an OHLC line chart. And you can see that we have 4 different lines of different colors here. Now, mostly we would never use a 4-position line. Right in the center there, at 12.45, what's the price? Okay. It looks like somebody threw a bowl of spaghetti against the wall, doesn't it? Okay. So if we're going to look at lines, and we know that the close is the most important, generally we will use a close-only line chart. So each point on here where the price breaks into a new direction, each of these sharp points, is the closing period. Now this is a daily, so each of these points represents the close of a day. Now what's really nice about a line close only is that it's very clear where things ended. It's very sharp. And you can see up here I've drawn a resistance line up here, and it looks like we have a double top. But you can see where this one kind of poked through. The real double top is over here in December and in March, not the one that's in January. Or you can see the double bottom down here. It's very sharp and clean. Okay, it's pretty easy to see patterns in this. Now, if you guys watch CNBC, they color this in here yellow, and they call it a mountain chart. What is it? It's a line close only, okay, and with coloration, shading in the bottom part. But they call that a mountain chart. The next one, and the one I kind of cut my teeth on, were bar charts, okay? Now, the nice thing about bar charts is that they're very simple. They're very easy to read. The left hand is always the opening price. The right-hand tab is always the closing price. And the vertical bar tells you how high it traded to how low it traded during that period, whether that period's 1 minute, 5 minutes, 10 minutes, 1 day, 1 week, whatever. Now, it's very important. I want to talk to you guys a little bit about statistical probability. And I'll show you a couple of your little faults. Cy, if you were to flip a quarter 100 times, how many times would it come up heads? 50-50, huh? That's pretty much what the standard answer is. But people, in 100 flips, that really isn't very much statistical evidence. And in fact, if you do flip it 100 times, you'll find it'll come up either heads or tails about 62, 38, 64, 36%. In other words, it'll come up 32 to 34 times heads. Okay? Flip it 1,000,000 times, and it'll be so close to 50-50, it'll be scary. Okay? And I want you to keep this in the back of your head, because while we have, price is fractal. Okay? And I'll write this word up here on the board. You can use it at your next cocktail party. It's very impressive. Okay? Price is fractal. That means no matter how many times you fracture it, no matter how small or how big it is, the rules are the same. But the validity changes. Okay, the strength of probability changes. And I can demonstrate this for you. This bar up here on the board, it's a 1 week bar. The opening tab is Monday, and the closing tab is Friday. Can I say the market or this stock was generally in an uptrend this week? Is that true? If it opened here on Monday and it closed here on Friday, generally it was an uptrend. What if this was a 1 minute bar? Are we in an uptrend? No. All we know is that for 1 minute it closed a little bit higher, but this thing could be doing this, couldn't it? And it just went, for 1 minute, it went like this. But basically, it was headed down. So by having more statistical evidence over the course of time, in this case a week, we had a lot of data points, and therefore the validity of the rule became more true. The shorter the time frame, the less statistical evidence, back to only flipping the quarter 100 times. Okay? It's not as true. The rule is the same. You would expect the quarter, even in 100 flips, to come up 50-50. But the reality is that it may not achieve probability. Does that make sense? Right. Yeah. Good. Now let's take a look at a bar chart here. And we're going to get really fancy with these things as we get a little bit further in, but I just want to point out a couple salient things to you. First off, over here kind of in the left quadrant, does everybody see this one here where the opening and the close were the same price, kind of a cross of indecision? You'll notice that the range bar is pretty much equally split. There's just almost as much on the top as there is on the bottom. Maybe there's a little bit more on the bottom there, huh? Okay. Well, this is a moment of indecision in the market. This cross of indecision. Who was it? Yogi Berra, I think, who said, if you come to a fork in the road, take the fork. Take it. Yeah, or take it, you know. Take the fork. This is a moment where the market doesn't know what to do. You can see that in the last few periods, the thing has somewhat been rising, and the market is taking a breather here on this course. We've come to a crossroads. Shall we go up or shall we go down? It's very important for you to start to spot these things, because if you're in this trade, you've reached a point where things can go really wonderful for you, or they can start to turn against you. Might this be an area where we might want to take a little profit off the table? It might be. It might be. It may just be literally what it is, a waiting period. Everybody ran up the stairs, and then they have a landing, and you go, then you run up some more stairs, and you hit the landing, and you go, but there's a choice. Could we run back down the stairs? Yeah, yeah, sure. Now, yeah, until we reach the roof. Okay. Now we go a little bit further along. Do you guys see another cross of indecision, but with a larger range bar on it? Okay. So this was either a real weak fight or a very strong fight. Anybody ever see the movie Braveheart? Sure. Yeah. One side of the valley, you had all these crazy Scotsmen with blue on their faces, and on the other side, you had all these British guys on horses and arrows and all this. And at some point, they all go down into the center, okay, and they fight like crazy. They're hacking each other and stabbing and shooting and burning and biting and poking each other in the eyes. And at the end of it all, there's Mel Gibson and his friend with their blue faces, and they're all beat up. And there's all these dead bodies around, okay? And they go, we won. And what was the old adage? War doesn't prove who's right, it proves who's left. Okay? But because they won, okay, we start to see a very large fight here, and there was one green coat and one red coat left standing. Nobody won this one. It was even Steven at the draw, okay? How about up here at the top, though? Everybody see this cross of indecision? But it has what we call a topping tail on it. It has a real long range bar at the top. Can everybody see this? Let's go to the board here for a second. Can everybody see this? This is what? A 1 minute chart. The price opened. Okay? The sellers took the price down here. The buyers pushed the price all the way up here. But within 1 minute, the sellers pushed the price all the way back to where it opened, and it closed even. Does this have more selling pressure in it? Yeah. So while it is a cross of indecision, the open and the close were exactly the same, is there not a selling bias in this? Sure. Okay. What if it was just the opposite? The price opened, okay, and the sellers took it way low. You ready? And the buyers took it up, and the sellers could only sell it back off to even. Is there now buying pressure, a bias to buying in that? Yeah, it was an even fight, but didn't the buyers do an awful lot of work to get it back up there? Yeah, absolutely. Everybody understand what I'm putting out up here?
Go over the pressure part again.
Sure. Once again, we're looking at this center one up here, Trish, okay? And we can see that the price opened here, and the buyers took it as high as it could go. But within 1 minute, the sellers slammed it all the way back down to here, where it closed at the same price. So while it ended up even, didn't the sellers have a lot more power at the end? The buyers had it all the way up here, but the sellers closed it down here. So that's selling pressure within that minute, okay? But that also, you can see, obviously, historically, what happened here. Can everybody see the run-up? You see how big the bar started to get? The buyers were really getting exhausted. They were really trying to push this thing up, and they tried one time too many. The sellers slapped it back down. The buyers tried to rally, and what happened? Price went down. The sellers took over control. So while this didn't tell us this thing was going to sell off, this gave us a hint that we were pretty much at the top. Okay, and that the odds were the next bar or candle was going to be lower. So if we were long in this stock and we saw this, we have 1 minute to get out, maybe 2. We may not get out right at the top. We might get out right here. Oh my God, it's coming back down. It looks like it's going to close right where it opened. I'm going to sell out and see how much I can take off the table. Wow, am I glad I sold out. Okay? Now, if you're really astute, you may not only want to sell your long, but you may also want to open a short. Okay? But if the sellers are pushing this down, okay, again, you're selling against competition. You may not get filled. See, I'm actually trying to make you put all this stuff together. Okay, now let's deal with Carl's comment over here. What about this weird one here? Well, that's exactly what it is. It's a weird one. Remember when we looked at the prints, I said there's sometimes out of the money or late prints? And we looked at that, I think it was $3.34 by $3.35, and then that one came through at $3.17. Boom. That's what that is. Okay, and they printed it, and it's out of time, out of circulation. Now, if you have a good charting package, your BD or whatever will, what will he do? He'll clean it. He'll filter it, okay? So tomorrow, this may only go down to here. As they go, well, that was really an exogenous, exotic, extraordinary event. Take it out, okay? So, but during the trading day, while you're in the trade, do you have to deal with out-of-the-money prints? Yes, yes you do. Okay, so that's the sad thing. Alrighty. Again, we can look over here. Here we see a cross of indecision that has no buying topping tail at all on it. Okay, it opens here, it goes down, and the buyers push it back up. Again, this would be then a bottoming tail, wouldn't it? Okay, so now it has a little bias to the upside. We've come to a crossroads. The price has come down. We've come to a crossroads. It can go down further or it can go up. But the bias is to what? The upside. And sure enough, it opens at the same price, drops back down, and closes higher. It opens, they fight it out. The buyers win. It opens and closes higher. It opens a little lower but closes higher. Okay. Over here, we see another cross of indecision where it opens and closes, right here, two of them, with long bottoming tails. What does the price do? It drops. People, I want to show you as many times that it doesn't work as it does, because I don't want you buying wholesale. Oh, it's obviously time to go long every time I see a bottoming tail. It's every time to go short every time I see a topping tail. Wrong. Okay. What else are we going to look at? We're going to be looking at our trend. We're going to look at our tick. We're going to look at our Dow Jones Industrials and our composite and our futures. Sure. People, we don't trade in a vacuum. Okay, we're going to look at our level 2 and see if there's a lot of bid support. And we're going to look at where we are. Are we close to the bottom? Are we close to the top? All of these things make a difference. Okay, let's talk a little bit about candlesticks. I kind of gave the story away already, but in the 1500s, there was a rice trader whose name was Munehisa Hama. And Hama-san was responsible for the growing, pricing, and distribution of rice throughout the 8 major provinces of Japan, plus across the channel to their major trading partner, China. So it was very important for Hama-san to be right. He developed a way to track and predict future growth, supply, and demand using candlesticks. Unfortunately, there's been a couple of years between Hama-san and us, and a lot of his lore was lost. A gentleman, which you will find on your reading list, took it under his wing, took it into his challenge to redevelop this. And he started in the 1980s, and today is still working to make it even better. His name is Steve Nissen, and you'll find him in your reading list, Japanese Candlestick Techniques. Very excellent book. But Munehisa Hama, in legend, was supposed to have done 100 major trades without a failure. People, I would like to make 10 trades in a row without a failure. Okay? That is extraordinary, absolutely extraordinary. Okay? Let's talk about the candlestick itself. In Hama-san's time, of course, he didn't have color graphics and plasma screens and all that kind of stuff. So his candles were either hollow, which are the green ones, or shaded dark, which are the red ones. And to read a candle is very simple. All you have to do is remember the bar chart. The left tab is the opening price, and the right tab is the closing price. Well, how do I know that that's the right tab? Because the candle's green. Okay? It opened low and it closed high, so it's colorized green. But if you look at it in a newspaper, it'll be white or hollow. Okay? A down candle, the opening price is on the left tab up here in the upper left-hand corner, and it closes down here. How do I know? It's red. Okay? So I know it opened high and it closed low, and therefore it's red. This colored box here is called a real body. The larger the real body, the more control. Obviously, green ones, the bulls are in control. Red ones, the bears are in control. Everybody with me so far? We have a range bar through the top and the bottom here. Okay, this is referred to as shadows. That's the official word. People call them wicks, sticks, fuses. That's how it got its name, candlestick. Because if you just look at it, looks like it might be a candle with a wick. Okay, except the wick's sticking out the bottom sometimes. You ready? Do you suspect, like we saw in bars, what if this shadow down here was very long? Even though it's red, would that indicate there's some buying pressure in it? Yeah. And here we have a green one. What if the shadow, the wick, was really tall on the top? It may be green, but doesn't that indicate that there was some selling pressure in it? The neat thing about candlesticks, people, is their nuance. Okay? Yes, the bulls are in control, but not firmly in control. How much not firmly? Well, we can tell by the size of the shadow. by the size of the real body. We start to see probability or not. Okay, so these things will work. And again, we're looking at a static screen, people. Okay, these things actually change colors as they develop. If the thing starts out green immediately on its beginning, that means it's opening higher than the previous candle. But that doesn't mean it will end up as a green candle. It may open up here, but close down here, and it'll turn red. So by watching them, you start to see how your patterns are developing. Now, you may be able to see this easier than seeing it in the prints. But what is the candle? It's the reflection of the prints. Okay? If this is a 1 minute candle, then there's 1 minute of prints in it. And this candle will go green, go red, go green, go red, finish red. Ah, my price is down. The buyers ran out of steam and the sellers took control and slammed that puppy back down. Okay? Alrighty, let's go see where we're going to the next slide, and we'll take a quick break here. So first off, as we look over here on the hard left, again, as Al pointed out, we're on a 5-minute candle intraday, okay? And we can see over here, look at how big the real body on this second green one is. So the bulls really had the bit between their teeth, and they were really running up the price, but there is a point where they can get a little too bullish. And you can see in the next 5 minutes, and actually the next 10 minutes, the bears pulled it back down. But the bulls were not finished. They opened the thing at the same price it closed and started running it back up. And again, we can see where it got a little too bullish. This one is really bullish here, isn't it? Can you see how big the real body is? But look at the tail on it, too. The sellers had it all the way back down into this neck of the woods, and the buyers drove it up. But they did run out of steam, and we can see that we have a selling candle, a red one right at the top up here, with a topping tail on it. And then the next one has a topping tail on it, and it's starting to drive price down. Not only are the bears in control, but they're getting selling pressure to back them up. Not to dilute them, but to back them up. Now, of course, as we go across here, here is a cross of indecision. You can see where the opening and closing price were exactly the same. How do I know? Well, there is no real body. There's no color to it. It's just a line, okay? Now, in candlestick lore, we call this a doji, D-O-J-I. We're going to revisit that, okay? So instead of saying cross of indecision, we look at dojis. And as you look at this doji, can you see that its shadow on top is much larger, 2 or 3 times the size of the one on the bottom? Okay, so indeed, we do have some selling pressure. We've reached a moment of the prices coming down. There was a little cycle up, and then it went sideways. It's resting. There's a moment of decision here. We've come to that proverbial fork in the road. Shall we go up or shall we go down? Well, the bias says we should go down. But what does it do? It opens at the same price it closed. It goes up, has a little bit of selling pressure. It closes. Then the bears take over. They open at the same price that green one closed at and drive it all the way down. Now remember, this bias in here may take a few minutes to develop. So there was a selling bias. We didn't see it in the next candle, okay, but we saw it in the candle after that. How about here? Here we have another cross of indecision, or doji. Does everybody see this one? And can you see that the bottoming tail down here is about twice as large as the topping shadow? Again, price was coming down. It had a little bit of a rally. It went sideways, and they said, what should we do? What do we do? Well, they opened the price higher. That red candle opened higher than the doji closed. But they closed it all the way down here, and then the bulls said, nah, we want to take this thing up. So they bought it again, and off to the races we went.
Does that indicate where the cross there, where it crossed over right there, did it spike up and then come down?
Or it went down and spiked up.
You don't know.
Doesn't matter. Doesn't matter which way it went. Okay. It's which one is longer.
Within 5 minutes, so it's
Mhm.
right.
During that 5 minutes, so that everybody's clear on this, the question is the thing opened, did it go up, and then the sellers slammed it down here, and then the buyers brought it up, or did it open here, and the sellers slammed it down here, and the buyers brought it all the way up here, and the sellers only had a little influence? Doesn't matter.
Could have been a mix in between.
Yeah. Yeah, it really could have done this.
Okay, go to the next one after that cross.
Okay.
Go to the next one, see it?
The next cross or the next
Then
candle?
Go to the very next 5 minutes.
Right here.
No, yeah, there.
Uh-huh, I know.
Now, it opened
Here.
right at the top there, even with it.
No, a little higher.
A little bit higher.
Uh-huh.
And then it spiked up and down?
Well, it may have gone all the way down, all the way up, but we know it closed here.
Okay, doesn't
Again, it doesn't matter because the net effect is still the same.
Okay,
The sellers won.
okay, yeah, right.
The buyers tried to take it up. They couldn't take it up very far, and the sellers closed it all the way down here. Okay? So not only is it red, but it also has a topping tail on it. Not a big one. You ready? Now, we talked about the real bodies, and as I started off over here, I said, you know, if they have a really long, tall body, a big one, then that's full control. But again, they can run out of steam. What then of the ones with very small bodies? As you'll learn as we go through this a little more in depth, these are called spinning tops. Okay, and you think about a kid's top that you spin. You ready? And again, these are rest periods. But clearly, can you guys see that this one, while it's resting, again has one of those very long, exaggerated topping shadows on it. And so there, even though it's a tiny bit green, and even though it's kind of indecisive, there's a fair amount of selling bias in this. And sure enough, 5 minutes later, price starts to go down. Yes, David?
Is it kind of safe to say then if the topping tail or the bottoming tail,
Mm-hmm.
if it's longer at the bottom, the price is going to head up, and if it's longer at the top, the price should head down?
That is correct.
That's a good rule of thumb?
Yeah, that's what I've been saying. That the bias is, on this one, the bias is to the downside, even though the real body is green. Okay? How about this one here? The bias is down, even though the body is green, because of the very large selling pressure. The buyers had this thing this high, but the sellers crushed it all the way back there. So even though the bulls are in control, green candle, the sellers had an awful lot of influence during that 5 minutes. Again, just because we won the war doesn't mean we didn't lose the entire second division. Okay? Back to Braveheart. Just having 2 left doesn't mean you really won. Alrighty? Okay, we'll get into some of these other guys in here as we get a little bit further. We also need to combine them into patterns. What happens if you have a green one next to a red one and the red one's bigger and all those kinds of things? We're going to be looking at that in depth. So here are all 3 of our charts. They're all the same company. They're all in the same size, but they're displayed differently. We have the bar chart in the upper left, we have our line chart in the upper right, and we have our candlestick in the bottom center. People, it doesn't matter which one you choose. Which one fits your eyes? Which ones do you like? Like I say, when I first started out, we didn't have candlesticks. I immediately go over here and I instantly see this flat-topped resistance line in those bars. But I can also see it now in these candles. Okay? Since about 1995 or 96, I switched over to candlesticks. And I still love my bars, but I have to admit I'm using candlesticks primarily. But don't let me influence you. You need to look at these, not just here, but on a day-to-day basis, and say, I see this more clearly. Does that mean you're going to have to switch charts to decide? Yeah. You got to look at them a couple times. Maybe you like close-only lines. Maybe you like bar charts because they're so simple. Maybe you like the graphical interpretation of candlesticks, but it requires what? Candlesticks you have to think about because it's not just a high-low. They're dynamic, they're changing colors, and They give you impetus as to where selling and buying pressures are. So you have to think about them a little bit more. Let's get into a little bit more depth here. Trends. We made the comment and kind of the little chuckle that we want to trade with the trend. Let the trend be your friend, okay? Identifying the trend of the market and the particular stock you are playing is absolutely imperative. It's of prime importance, people. You've got to know where you're going overall. You must determine the trend of the market before you enter a trade, okay? And we can see that in the course of about 3 or 4 days, we have a basic uptrend, but on the 22nd, trends change, people. Nothing remains the same. What was the old line? If you don't like the weather, wait 3 days. Okay? Sure enough, it'll change. Except here in beautiful California, where it's always sunny. Now, the first thing, and most important, is that trends tend to continue. And Carl brought it up the other day. I believe it's Newton's third law of motion, states that an object will continue to move in a straight line unless acted upon by an outside force. Okay? Trends tend to continue until acted upon by an outside force. What is that outside force likely to be? News. Earnings report, geopolitical events, assassinations, some CFO going away in handcuffs on CNBC. All of those are outside forces that's going to influence it. Martha Stewart, okay? Now, the next thing, if I didn't show you this, you guys, very few people can accurately define a trend. And it's amazing. I started you guys off with general theories, okay? I want you to continue trying to define everything, because in definition, there is validity, okay? What is an uptrend? Well, an uptrend is a series of higher lows in conjunction with higher highs, but the lows control it. And if you're going to accurately draw an uptrend, you draw the line across the lows. Okay? So here we have a series of higher lows in conjunction with higher highs, but higher highs aren't required. Can everybody see that I draw my line through the lows? But there are some times when I'm going to have a lower high. Well, just because I have a lower high doesn't mean that uptrend is broken. However, as I approach, do I expect to see lower highs and eventually a lower low? Yeah. As the thing starts to run out of steam, the highs will get lower. But what breaks the trend? A lower low. Okay, does that mean we have a downtrend in place? No, it just means our uptrend is broken. Okay, now what might happen? Thing could go sideways for a while, and then if it started to go again and move in a direction, which way would we expect it to go? Up, because trends continue. Thing's going to move up, it's going to rest, it's going to move up, it's going to rest, it's going to move up. The overall trend is up until some outside agency deflects it. How do we know when we have a downtrend in place? Well, we need a different definition. A downtrend is therefore a series of lower highs in conjunction with lower lows, but the highs control it. So in a downtrend, we're going to play connected dot on top of price. So here's a downtrend. We have a continuous series of lower highs, but occasionally we may have higher lows, huh? But that downtrend is still in place. So where do we draw our line? From top to top to top to top. We draw the line on top of price on a downtrend. Now the question is where do you draw the line? And boy, I'll tell you, there's 100 gurus out there, and every one of them has their own attitude on where you're going to play connected dot. Let me give you just a little bit of insight. I'll let you make the choice. I am not a lazy person, but I do try to keep things simple. Okay? So, if I'm looking for an uptrend, I'm going to draw my line on the bottom, as I should, but I'm going to connect corners. Okay, I'm going to draw from here through this one. Okay, or maybe I could draw from here through this one. But I just pick the corners. If I'm drawing an uptrend, I would like to go green to green, but I'm not fastidious about it. Okay? And needless to say, if I'm going to draw a downtrend, I'm going to draw from corner to corner, like that. Okay? Mike, I've read these books. I've read Martin Pring and John Murphy and all these other technical. They say you should use the tops of the shadows. I would normally agree with them. The problem is that I trade on a short-term basis, and at any given moment, okay, I may have erratic data that hasn't been filtered yet. So if I am religious about following somebody who says I must draw from top of shadow to top of shadow, i.e. like this, and I'm drawing here and here, okay, that's wonderful. But what happens if I have erratic data? Okay, I mean, what if the thing does this? Okay, well now I'm drawing a very steep line, and it's not necessarily true. There may be one rotten trade up here for 100 shares, 20 cents away or 50 cents away, like we saw in that bar chart. Okay, so I take the easy method and I draw here. Now, what's most important? Being perfect or being consistent? Being consistent and seeing the world through the same perceptive eyes. Always perceive the same way. Okay? I've been drawing lines for a couple of decades, I hate to say. Okay? I draw them the same way today as I did then. Yeah, I'm on candlesticks now, but I used to draw them on the corners of bars. Okay? So that's just how I did it. And I don't intend to change, so there. But you guys have the opportunity to look at things and draw some test lines and see what clearly gives you the information that you need. And what do you need? You need to see, is it an uptrend or is it a downtrend? And does it match definition? One of the things that we want to think about is we've already agreed that we would use the most important of OHLC is the close. Yeah. So this becomes a little bit more difficult. Wouldn't it be smarter then to draw from this corner to this corner? But then our line is in the middle of the shadow, or in the middle of the real bodies, and we may lose it. It's not clear, it's not defined. I like the idea that this looks like it's a barrier, because it is a resistance line on a downtrend. It is a support line on an uptrend. It just happens to be angled support or angled resistance. But yeah, obviously it's taking out the exogenous shocks by at least going to the corners. That was Carl's point, and I agree with him to some extent. And also, it's what? Easier. Okay? Now, if we draw a line, people, we must set a rule. I want you to get that through your heads. Okay? If we draw a line, we must set a rule. There's got to be a purpose in drawing a line. Well, if I draw an uptrend, okay, what's my rule? If it's going up, what are we thinking? Are we thinking long or short? We're thinking long. Sure. So if we have our candles or bars or whatever on the uptrend, what is our rule? As long as price is to the left of the line, we stay long. But if we go below the line, we get out. I don't know how much simpler I can make it for you guys. Alrighty? Now, you can define what the out is. Could we say that if we had a close below this line, we're out? Sure. Could we say we needed 2 closes below the line and we're out? Sure. What if it breaks the line by 11 cents or 50 cents? Could we set that rule? Yeah, it doesn't matter as long as you obey the rule and you can afford it. Don't say I'm going to let it break the line by $10, you know, and it's an $11 stock, you know, come on. But within reason, you can make the rule whatever you need to make it to match your style of trading. Now, for our purposes, we'll be, during our exercises, well, it's a rule of thumb, okay, but it's your thumb. You get to choose it. Now, when we first start trading here live through the week, we are going to be using a close above or a close below as our first rule. But I'll give you somewhere to start. You got to try something, okay? Now, if we're on candles, a close below this line would be what color? Red. Because the candle, if it's a down candle, it's going to open here and it's going to close here, so it would be red. In a downtrend, we would use the exact opposite. We would, I say not the exact opposite, because if we're still to the left of the line, we stay in, and we get out if we have a close above the line. What color is this candle? Green, because it opens here and it closed up here. Okay? I would be buying cover, yes. I'd be selling short and on that downtrend, and I would buy it back when I get a green candle that closes above that line. Now, guys, is that a fairly simple rule? What is really neat about trend line trading is that it takes the emotion out of the situation. You don't have to decide, should I stay in, should I get out? I'm in or I'm out. It's very, very clear. Yes, sir.
When you make your trend line, before you do that, should you have decided that you are going to be in and out in 10 minutes that day?
This really worries you, doesn't it?
Well, I'm trying to determine which chart you should be using. Or is it something like starting out, maybe we should be using date charts as opposed to minute
Sure.
charts? Or
You don't know who you're going to be. You don't know what you're going to see yet, David. This is a brand new world to you. You got to start somewhere. Pick something. I would suggest that you try to find a trend intraday. And then it doesn't matter. Does it matter whether this is every 5 minutes or is this every minute?
It does matter, doesn't it?
Does it?
Yes.
Why?
Because if it's every minute, it could have those little loops dropping below the line.
Sure.
As opposed to the 5 minute, which you...
Okay, so this particular 1 minute was red and it jigged you out, and then it comes back up here and you get back in. So you have more trades, but the net result is the same, isn't it? You just have the higher cost of doing business? Yeah. Don't worry about the cost, guys. I showed you up here on a board that if you went up to $50 per trade, $50 per ticket, a $100 round trip, you could still make money. And that guy was in and out every 3 seconds. Remember that? The guy did $7,600, 137 trades. We showed you the sheet. Okay? He was averaging $56 a ticket. Okay? If his costs were $50 per ticket, he was still making $6 times 137. You all nodded your heads. I said, would $700, $800 an hour be okay with you? And you all said yes. Okay? So is it the cost of doing business or is it doing business properly? It's doing business properly. Now, please, don't misunderstand me, guys. I understand that the cost of commissions and everything else is very, very important. Okay? But certainly don't focus on that. That isn't what's going to get you in trouble. Spending $15 or losing a 50? Losing 50, because you have to spend the 15 anyway. Okay? When you open a trade, win, lose, or draw, you've already spent the commissions. Opening a trade is optional. Closing it is mandatory at some point. Alrighty? So it doesn't matter whether you're on a 1-minute chart, a 3-minute chart, a 5-minute chart, a 10-minute chart. What do you see and what keeps you happy? And, you're struggling with this, and you and I can talk a little bit, but don't get it in your heads. I mean, if you argue for your limitations and you say, I just can't understand this, you will not. Okay? Open your minds and think about this a moment. In a 5-minute chart, we have what? 5 1-minute periods. Alrighty? And if we have our uptrend and we have our rule says that if it closes below that, well, we might have a shadow like this. That's not a close, is it? But if this was 1 minute, it may have closed there during the 1-minute chart. We could have, this guy might look like this, huh? We might have, no, it has to be the same height. One, two, three, four. So, this guy actually closed over here, which is this close here, but we had some closes below, didn't we? Okay? So what is the rule? If I'm to the left of the line, I'm in. If I'm to the right of the line, I'm out. Here I'm in. Here I'm in. Here I'm in. Here I'm out. Okay? Here I'm out. Here I'm in. Okay? So it cost me $10 to get in, and it cost me $10 to get out, and it cost me $10 to get in. How much extra did it cost me? $20. Okay? We bought the stock at 30. We're getting out at $30.50, and we got 200 shares on it. How much money are we going to make? You make $100. How many times can we afford extra 20? 5 times. Well, 4 times. We can afford an extra and still come out of profitably. Okay? So once I start to see that 1 minutes are taking me out to switch, I switch to 5 minutes, and I'm out here. And the next one comes in, and I get back in. Or maybe it's a 10-minute chart. Or maybe we switch to a 20-minute chart. Okay? If you don't like jumping in and out, then don't use short-term charts. But what is the overall trend? Is it up or is it down? If it's up, then let's go long. Okay? And we monitor our risk with a rule. And if it says a close below on a 1-minute chart, then when it closes below on a 1-minute chart, we're out. It says close below on a 5-minute chart. We get out when we have a close below on a 5-minute chart. If it says our rule is close below on an hour chart, then we wait an hour. And did it close below? And if it does, then we're out. It doesn't matter what the time frame is. It's just your style of trading, whether you're a high-speed trader or a slower-speed trader. What if you said, I'm going to hold this trend for, here's one, okay, that lasts the whole day. There are no closes above that blue line. We get short anytime we get close to the line, and we stay short until we break it. If we wanted to take this home overnight, could we do that? Yeah, we could. As beginners, I don't think it's a good worth the risk. But it's still, what am I going to play tomorrow? Am I going to play long or am I going to play short? I'm going to start short until it proves to me that I'm wrong. Okay, that's why we set a rule. Okay, and this happens to be a 1 minute, but this lasted, it never broke that line for what? 6 hours. Of course, trends are to be honored. When violated, you must act upon your plan. Okay? Now, here's another way of looking at it, and here's how I trade these guys. You might like to think about this a little bit. I wait until the first half an hour is going by, okay, first 20 minutes to a half an hour, and I start looking. Do I have a series of higher lows, or do I have a series of lower highs? Well, starting at 10 o'clock right in this neck of the woods, I've had a series of lower highs. Now, the thing starts to come back up on me here, but I'm looking for a short. So I'm going to wait. I'm going to be patient. This is 5 minutes. I'm going to wait an extra 10 minutes and see a red candle and one with a topping tail. And I'm going to draw from this red candle to the top of this tail and extend it out into time. Now, people, I don't know what's coming up. I don't know what the hard right edge is. I'm right here at this green candle. Okay, I'm going to get short on this red candle or the next one. And I'm going to stay short until I get a close above that line. And as you guys can see, I have a green close right here. That's when I buy cover and I'm out of the trade. Now, I start looking around and I say to myself, do I have lower highs or do I have higher lows? Well, this one kind of went sideways for a while, and I see that it starts making lower highs. I have to wait, what, 2 hours in here from 12 until 2 o'clock in the afternoon? What is the number one secret to trading? Patience. Okay? So then I draw from my starting point down through this line and extend to the future, and I get short right in here. And what happens? I get jigged out. 15 minutes later, I'm out. Did I take a big loser or a small loser? Small loser. Am I allowed to take small losers? Very good. Am I thinking long? Do I have a series of higher lows yet? No. And I start to see a series of lower highs. So I draw yet another line down through here, and I get short somewhere in here, and I stay short, and I stay short, and I stay short, and I'm out over here. People, I made money. I lost a little tiny bit, and I made money. I only made 3 trades during the day.
Mike, how come you always drew from over here? How come, like, later on you didn't drive?
Because I always had a series of lower highs. I could redraw from here through here, okay? But isn't that basically the same angle?
How about in between now? I had the same question, too.
Well, let's go out to the platform and let's draw some. How about that for a deal? Okay, here's a 2-day, 5-minute chart. Okay? Now, the tough part here is we can see what's happening. You ready? But we're gonna have to just use our imaginations as best we can to pretend we can't see anything. So let's start over here. Okay? We know that we're not going to trade until at least 10 o'clock. Okay? So we can look back in time, and do we see a series of lower highs or do we see a series of higher lows? Lower highs, okay? So you know what I like to do. I like to draw from corner to corner, okay? So I'm going to pull one in here, but this isn't within my trading time. That's too early. So I'm going to go back up here, and I'm going to draw one through this candle, okay? Which is just about, and the thing popped on me. Hang on a second. Let me move that over. Come on, move. No, I don't want to remove you. There. Okay, so I'm going to get short either on this candle or this green candle. 5 minutes later, what happens to me? I get jigged out. I have a small loser. Okay? If you guys want to keep track of all this, you can. Okay? Let's say we got short at 25.71 and we're out at 25.74. We lost 3 cents plus our commissions. Okay? I keep saying, wow, that didn't work out too well. Okay, maybe I draw another one in through here and I pick up that spinning red top right here. Get short on this candle and I stay in and I'm out right here. Now we made a little bit of money. You ready? I look and I say, do I have a series of higher lows or do I have a lower high than the last one? Well, if I draw a line across here, and I get it straight, I can see that this low is lower than this one. Okay, so I come back up here and I draw another line. You ready? I get short on this candle or on this one. I stay short, I stay short, I stay short, I stay short. Your call. Are we out here? Is it above it or not? Is it right on it? I'll let you make that call. But you guys clearly see we made money? Now, I didn't maximize my trade yet. I'm just obeying this very simple rule. Is there a reason I could get out down here? Well, maybe. Okay, under candlestick theory or volume or support lines. We haven't even gotten to those things. But just using this simple rule, have we made money? Okay. So then I look and I wait for a little bit. Do I see lower highs or higher lows? Well, I draw a line across here and I go, well, this high here is lower, so maybe I draw one more. But what am I now doing? Am I drawing red to green? Aha, okay. And I get short and I'm immediately popped out. Does that tell me something? The trade didn't even last 5 minutes. So maybe I started looking around and I go, you know what? I do see a series of higher lows in here. And if I draw green, these bottoms, or this green to this green, I am now going to buy long right here. I'm still in this trade, people. Now the question is that Trish and Carl asked, could I then draw like this? Okay, and I can even go in here and change the color of that one so you can see it. What color do you like? I like fuchsia. Good call. Okay, so we could actually draw intra-trend lines too instead of going from the starting point in every one. You ready? So these are different methods and different styles. But clearly, people, all I have to do is find a stock. Okay, here's a stock. Can you guys see the trends? Or I can draw the lines in here. Okay.